हाँ, बात कर
Good morning and good afternoon, everyone. Let's start our discussion. Welcome to Muscat Insurance Company SAOG's MSX Investor Discussion Session related to the unaudited financials for the period ended 30th June 2023. I'll introduce myself. Myself, Alina, Acting CFO of Muscat Insurance Company. Our team, Mr. Parameshwaran LS, Chief Commercial Officer. Mr. Saeed Hussaini, Senior Manager, Life Underwriting and Claims, is with me. We really appreciate the initiative and thanking Muscat Securities Market and Capital Market Authority for this platform, for presenting financials to the investors and to clarify any queries with respect to the financials of Muscat Insurance Company as at 30th June 2023. To start with, we have divided into two sessions. While the first will be giving a brief introduction about the company by Mr. Parameshwaran and having a small presentation on the overview of financials. I'll leave the floor to Mr. Param to have a brief introduction about the company.
Bismillahirrahmanirrahim. I'm just going to introduce about the company. Muscat Insurance Company was established in the year 1995. We are a composite insurance company. You are able to hear? One second, if you're not able to hear. Excuse me, are you able to? Yeah. Sorry for that. Muscat Insurance Company was established in the year 1995. We are the composite insurance company dealing with both general as well as life and medical insurances. Our head office is in Alcoy, main Alcoy service road. We have got 9 branches. Almost 9 branches are manned by Omanis, and we have done our financial quite well as of July. We have about 130 staff across Oman.
Excuse me. Hello?
Yep.
Yeah, there is any slides to be shared or only no slides?
Sorry, not able to hear.
Because I don't see any slides, any PowerPoint shared by you or by your team.
Okay. Slides will come in a minute.
Okay.
Yeah. Thank you for that.
Thank you.
So we have done our business quite well as compared to 2022. That means we are growing. We have done quite well. And we'll be overachieving our target by end of this year. This is what our plan. And our clientele includes from construction companies to consultancy firms, manufacturing companies to education institutions. We thank you for your patience. Now, Alina will take over through the financials with the screen share. Is it visible now, sir?
Yeah, visible. Yes.
Thank you.
Thank you, Mr. Param. Now we'll just go through the financial highlights. The voice is audible.
Yeah.
First, the financial highlights. The gross premium, or as per IFRS 4 standards, the premium return, gross return premium is 13.8 million compared to 10.1 million as at 30th June 2022, which is 37% higher than the previous year. The net premium revenue earned is 2.2 million compared to previous year, which is 61% higher than previous year. The claims incurred is 2 million, vis-a-vis 880,000 for the previous year, which is increased by 128%. Underwriting contribution is 483,000 compared to 851,000 for the prior year, which is less by 45%. The operating expenses remain same compared to previous year, which is 1.5 million. The investment income has reduced from 1.1 million to 623,000, which is 46%, which is mainly from unrealized income. The profit after tax for the year, it is loss 367,000 compared to the profit of 473,000 prior year. Earning per share is negative 0.033 for the current year compared to 0.043 for the prior year. Next is on the key indicators showing the gross premium, which I have already explained, it is 37% higher than the previous year. The premium revenue earned is also higher than, which is 61% higher than the previous year, which is 1.392 to 2.239 million. Net claims incurred has increased from approximately 900,000 to 2 million, mainly from motor and medical portfolios. The underwriting contribution has reduced slightly due to the increase in claims from 851,000 to 483,000. The operating expenses remain same, which is 1.5 million. The investment income has come down. The loss ratio has increased from 63% to 90% during the year. Now coming to balance sheet summary. The total assets for the company is 46 million, which is more than the previous year ended December 22, which is 40 million. This is mainly because of the increase in business. The total liabilities has also increased, which is 28 million compared to 24 million as at 30th June 2022 and 22 million as at December 2022. The total equity has slightly reduced due to the negative or loss during the period from 17.9 to 17.5. The technical reserves have increased to 18.6 million as at 30th June 2023 compared to 15 million as at June 2022 and 13 million due as at December 2022. RI share of technical reserves due to increase in business that has also have been increased from 8 million from December 2022 to 12 million as at June 2023. The total investments have increased during the period from 26 million to 27 million, 26.2 to 27.1. Bank and cash, that is including non-current deposits, has increased from 9.5 to 11 million. Net assets per share is 1.595 as at June 2023 compared to 1.628 as at December 2022. These are the brief overview or the highlights on the financials. Please let us know if you have any questions in this regard. The floor is open for discussion. Also, if you have any questions, you can free to ask and you can send email in the company contact, which is at info@muscatinsurance.com and investment relations, investor.relations@muscatinsurance.com. If you have any queries, please let us know. We are free to answer.
Yes, Assalamu alaikum.
Welcome, sir.
Yes, I see from the financial tables that because the loss of this 6 months because the claims is I think 2 million, huh?
Yeah.
Claims.
Yes, claims has increased.
Increased claims. This claims comes from like car accidents and others also.
Yeah.
Primarily motor claims.
Okay. Now, my questions, there is any plan for dividing the share?
As of now, we don't have any plans to divide the shares.
And still not discussed, huh?
Pardon?
I think also not discussed by the board also.
No, not yet discussed under.
Okay, and what is your any estimate to earn profit by end of this year? Or
Yeah, definitely we are working Yes, we are working on the corrective measures and slightly it is improving and hopefully at the end of the year, we will be showing a good results.
Yeah,
As of
because
July-
why? Because I see the performance previous 2 years there is improvement and this profit, but suddenly this year it's come in the negative. This approach. Can you
Yeah.
give like some reasons?
Some reason mainly this is high motor claims and some of medical claims also. But we are addressing these issues and as of July, we have done quite better. We have reached a profit stage as of July 31st, which is unaudited. But we have changed from loss to profit. We have changed as of 7th month, which is July.
Okay.
Yeah.
So I don't know. So hopefully by the next 6 months,
Yeah,
hopefully
by
hopefully the company go to the profit and see
Inshallah.
positive signal, inshallah.
Sure.
Sure.
Yeah, from my side, I'm okay. I don't know for the others.
Thank you.
Thank
for
you
your
so
questions.
much.
Yeah.
Thank you.
Hello.
Yep.
Hello.
Assalamu
Good
alaikum.
afternoon.
Good afternoon.
My question is on your claims ratio. You just said that by June, July, the claims ratio has improved, and I can see that from first quarter to second quarter, there's a marked improvement
Yeah.
in the motor claims as well as on the medical side. Also, there is some improvement. So, can you tell us, what are the reasons that has led to this improvement in the motor side, particularly when all other companies are doing, struggling to generate less than 100% claims ratio? Your average claims ratio has come down in the motor side during this quarter. So, what are the reasons for that?
Basically, we are controlling the cost of claims. See, what is happening on the road, we can't control, but we could do some cost-effective measures on the claim control, cost control, which we were successful, or we are realizing that we are successful, and accordingly, we could improve the loss ratio. And we also inform our corporate clients and individuals wherever the claims are increasing, we are informing them that your loss ratio is, coming so closer to 100%. So you have to take some steps. You have to inform your staff through HR and make them aware. So such kind of measures are helping us to improve the claims ratio.
So how is it impacting the business, impacting the overall business in terms of gross written premium? What I'm seeing is, are you able to increase the prices, or are you losing business because of the stringent claim management and everything?
No, we have two sessions. One is retail, other one is corporate. So we have a little more, more claims in retail than the corporate. So to control retail claims, we are only, educating the customer through our branch staff, and we are also tweaking the rate whenever required. Maybe 2 Riyal, 3 Riyal, for example, for a third party. And we increase minor percentage in the comprehensive.
Okay.
Yeah. But we frequently monitor that, every month we monitor what's happening.
Okay.
Yeah.
Yeah, another thing that I noticed is your ceding ratio has come down compared to last year. Is there any particular reason that you're retaining more of risk within the company?
No. Ideally, the ceding ratio has not come down. Only the portfolio mix has changed. Otherwise, the ceding ratio and percentage remain same as of the previous year. There is no change in the percentages, etc. So maybe, but the business component, whatever we have received, maybe portfolio mix has increased accordingly. That's why.
Okay, got it. See your investment income. Last year, you had around 7% yield on your investment income. This year, we are not seeing that. We are seeing that your investment income average on an annualized basis, it has come down to 2.5%. So what are the reasons for this? Especially when we have an increase in investments and total cash and equivalents available has increased from 36 million to 38 million during this year. So, how do you attribute this decline in investment income, especially when we are talking about an increasing interest rate scenario? Probably your the reinvestment rate should be at investment should be at a higher rate. So, what are the reasons for this?
The main reason actually for the increase in the previous year is mainly because of the unrealized income which we had, because we had local equities approximately 3.5 million, 3.8 million we have equities. So the unrealized income has contributed little quite high on the previous year investment income. However, that has reduced during the current year. We are also diversifying. We are reducing our portfolio. We are reducing our investment in equity shares and we are redirecting to the fixed income investments, which will be having a fixed income during the coming year or maybe in the next 6 months of the coming year. So that is actually the main reason for the decline. Yeah.
Okay. So what's your strategy with this? Now that you got money, 70% of your investment in HSBC has been converted to cash, and 30% is still you have this equity investments. So what's your strategy, investment strategy with this bank? So half shares as well as what are you going to do with this cash that has come very recently?
We will be definitely the 70% whatever we have earned, we will be depositing in the fixed income investments. Remaining 30% as of now it is holding, and later as per the instruction from the board of directors and all, it will be decided. But definitely the amount what we have earned will be depositing in the fixed income investments, which will generate more yield to the company.
At least for the time being.
Yes.
So what's the average yield that we are getting on these kind of these deposits, and what's the tenure that we are placing these funds at?
As of now, as you are aware, the interest rates are high. We are getting approximately 5.5 to 5.8%. And mostly we will be doing the long-term investments, 2 to 3 years. So which will be generating more income and more steady income for the company.
Okay. And when do you think that you will have a combined ratio lower than 100%? What's your roadmap for that? Right now, we are at almost at 90% plus on the claims ratio, and we have expenses. So when do you think that we will be able to generate 100% or less lower than 100% combined ratio?
We are comfortable on non-motor and non-medical. Only motor and medical portfolios we have got some issues. But as I said earlier, we are making certain measures and steps to minimize that. So we are finding it fruitful. So over a period of 4-5 months, by end of this year, I think we must be able to reach there or at least lower substantially.
But these motor and medical are the pain points, but those are the major business lines as well, isn't it?
Absolutely.
So as long as these remain at a higher level, their claims ratios of continue to bear the pain. So how I'm just curious as to how are we planning to have a roadmap? Do we have a roadmap for that? Maybe by end of this year or over the next period of next 3 years, we will be targeting to reach a combined ratio less than 100%.
And definitely, we have got certain measures, as I said earlier, on both medical and motor. We are finding it. We are making it. What you call this out of court settlement. We have got court cases coming, which is known to all the insurance companies on injury claims, which we are finding it certain different way of handling those injury claims. We don't encourage our customers to go to court, and we try to settle amicably within our own out of court settlement committee within the office. So that is one way of doing things on controlling the cost on motor claims. And we have also improved empanelment of garages where we can have a better competition, within or among the garages, where we will have a lesser, cost involved. More garages means more competition.
Fine.
And we are
That's it
also
from me.
constantly discussing with the agencies concerned, automobile agencies concerned, because everyone knows that up to 1 year it is mandatory that it has to be repaired with respective agencies. So there also we are having certain discussions how to improve, and we have got our strong now survey team. Whether some part has to be repaired or replaced, he will decide. You got it, and he will convince the customer and the agency, and then move forward.
Okay. One final question that I have is, what's the average yield of deposits that we currently have, and is there any significant portion that is coming up for reinvestment or nearing maturity during this year?
Average yield is 5.5% approximately.
On total deposits.
Yeah,
Okay.
on total deposits. And we don't have anything other than small investments. We don't have any long term coming for renewal current year.
Okay. So 5.5 is it a safe assumption to?
Yeah, it's actually 5.5 to 5.7 we are getting, I can say average, maybe more.
Fine. That's it from my side. Thank you very much, and wish you all the best.
Thank you so much. Thank you.
Hello.
Please, further.
Yeah, sorry. Yes, I have also one questions. The last year the company give money to the investors. I think 2019 or 18.
Dividend, yeah.
Yeah. Well, any
2019.
plan to give investors any deadline like to give some like this? Maybe I don't know. Maybe this year is very difficult. Maybe next year to give the investors some money to them.
Inshallah.
Like profit.
You mean dividend, right? Dividend to
Yes.
the investors, yeah.
Yeah.
Inshallah, we are planning. As we rightly said, 2018-19 we paid. After that, there is a gap, and we are working on that. Thank you for that special question.
No, any date, any years, any special day, any working the some years. This year I think it's difficult this year.
Ideally, like we are still in the accumulated losses. We have to turn that accumulated losses to profit before starting the dividend. Inshallah, like by year end, we will be having better results.
Okay. Thank you.
Well, I have a follow-up on that. You have accumulated losses and you have a contingency reserve deficit. So, how will you be able to distribute dividends during this year, or even next year?
Not current year. First, actually, we have to clear the accumulated losses. So after that only we'll be able to start paying out the
and you'll have to clear the deficit in contingency reserve as well, isn't it?
No, there is no deficit in contingency reserve. We are giving proportionate amount to the contingency reserve. So there is no deficit in contingency reserve.
Okay. Fine. Thank you.
Thank you.
Thank you.
Any other questions? We'll wait for a few more. We will wait for a few more minutes if anyone have any questions. I understand there is no further questions. So we once again thank Muscat Securities Market and Capital Market Authority for this opportunity, and we thank you all the investors who attended the session. Thank you
Thank
once
you.
again.
Thank you.
you.
Thank you.
Thank you.
Thank you so much.
Thank you.